Hi friends, welcome to the Money Breeder. In this video, I'm going to cover some psychological things and also some realizations one should understand before entering into the capital markets. Okay, before going into the video, please be mindful of this standard disclaimer. And also, whatever the content I am discussing here, just based on my perceptions and also what expectations I had when I entered into the market and how much loss I had. Based on that, what the realizations I had. Okay, those things I'm going to discuss point by point. Okay, I cannot cover all the learnings and all the problems I had in one video. So I'm going to highlight few things, important things. One must have these things. Okay. Uh, this is the standard disclaimer. Please be mindful of it. And also, whatever the content I am discussing, please be take it like okay, pinch of salt. Don't get angry on me. Okay. Coming to the topic. Okay. Top three things that every trader should understand. First thing, the poor financial education create unrealistic expectations which leads heavy losses. The poor financial education. Okay, let me take one example here. What is the expectation and what is the reality? I wanted to create the awareness in everyone. Okay, why education is important. Let's say, for example, when you were at okay age of fourth year or third year, you started your education. Okay, until your graduation your age might be 21 years. Okay, let's say between in general 5 years. Okay, after getting the 5 years age you started your education, the first standard. Okay, after 21 years your graduation finished. After that there could be some people might have gone to the post graduation also. Okay, then after finishing your graduation or post graduation, you might have done some courses 1 year. Okay, some courses or some training you might have taken, some competition exams you might have attended by putting lot of effort and got the job. Okay, got the job. What is your first salary? Just you imagine. Okay, or you recall what is your first salary. Let me take my case. When I completed the my bachelor degree, after that I have done the bachelor of education, that is BEd. My first salary is 450 rupees. Okay, per month total salary is 900 rupees. I joined in the mid of the month and I got the 450 rupees is my salary. Okay, as a teacher in a private school. Okay, this is what in the year of 2004. Okay, I remember while giving this also. Okay, my principal told me that I am giving you very high for you because you completed the B.Ed. There are other teachers who completed only. At that time it was like a TTC, teacher training course, who is eligible for the elementary school, all these things. For them I am giving even less, 750 something like that. Okay, believe me, I am telling always truth. Okay, so this was my first salary. After that, of course, 1 year my salary increased to 1500 rupees in within 6 months. Okay, then I realized that this is not the life. Okay, so with this with this 500 rupees is the salary. How many years I have done the education? Started from the 5th to 21 years, plus after that 1 year B.Ed education. In between, by 15th year I completed 10 years 10th class. After that plus 2, after that plus 3 bachelor of degree, after that plus 1. 10 years, 12 years, 13, 14 years. For the 14 years of education, I got the salary of 1000 rupees per month. This is what for this education. This is what the compensation I got in the beginning. This is what the education and payoff. Why I am talking all these things, you will understand in couple of minutes. In case of trading, a person comes without having any background of financial, he will come with the money, hard earned money. Somebody refers him, some YouTubers refers him, give the link which is very easy to open the trading account, and park the money into the trading account, start trading. Without having any education, he want the returns of, let's say I am taking normal one teacher or one government employee I am taking example, or some private employee. First initially he says that my friends are doing trading, they are earning consistent money monthly 5k. For example, this 5k I wanted to use for my two-wheeler diesel or petrol, something transportation expenses or bus pass expenses. I wanted to earn some money, additional income from the market. This is what the everybody having some income, some additional alpha you wanted to generate. For that everybody wanted to enter. Let's say for example monthly 5k is your target. What is the education you had? What is your first month salary when you started your career in the job? What is the first month salary? How much your expectation? How much education you had there and how much you are expecting here? You calculate. That means you understand that what is the role here for the education. That is the first thing. The second thing is, let's say a person who is making the money might be having some experience with respect to the markets. He will be having some financial education, or he might have trained with respect to that. Let us discuss the training. Lack of information is not a bad thing. If you don't have any knowledge, you sit idle. But the information, the wrong information, always remember guys, the wrong information leads the illusionation in you. With that illusionation, you are going to have the bad expectations on you, which leads the losing the money. For example, let's take example, you took some training somewhere. Even from me itself, you can say, I am frankly telling, you took the training from me. I might have taught you whatever I know it. But here you must understand that instead paying some money to me, for what I am teaching, which is useful or not, you don't know. I may be junk. I am dumping. Just I took the money from you. That is what I am dumping you, something which may not work or which is not at all useful. That recognition one must have in. Let me take, you studied the volumes. volume steady, RSI. Okay, small example I am taking. Volumes confirms the trend, right? Volumes confirms the trend. If the volume is very big, price has to go up, right? Price has to go up, right? Okay, let me show you some charts. After the volume, after the heavy volume, market start falls. This is the reality. Okay, what is the reason? What is the right way of studying the volumes? Okay, what is this? This is the Jyoti Labs. Okay, I am taking Jyoti Labs just for the intraday yesterday's price action. The price is going up. Okay, it reached to the place where it had the very big candle with a very big volume. Okay, after such a after such a big volume, price has to go up, right? As per the volume study, volumes confirms the trend. Okay, price has to go up, right? Let me check. After that, what happened? You took the entry, put the stop loss. If the volumes confirms the trend, okay, why it fallen? In intraday, it was 3%. Remember, guys, it was 3% from here to here. Okay, 3% loss means you will get heavy loss. Must take. Okay, let me remove the some price action here. Let me take this point or even this point. Volumes confirms the trend, right? Volumes increasing. This is the massive volume candle, right? This is the very big price move. Okay, very big price move. After that, what happened? By seeing this volume, you initiated the trade here. For example, I am telling. Okay, by seeing this, what happened after that? Volumes confirms the trend. Just I am taking some volume study only. What went wrong here? Okay, similarly, RSI. People always think, okay, RSI after reaching to the overbought zone, this is overbought and market start falling. Right? Let me show you something. Okay, the what is the wrong education you are having here? Let me go to the indicators. RSI, relative strength index. Okay, it started overbought zone from here. Started overbought zone from here. After overbought zone, okay, what is the price? This is the 14 percentage. Once it reaches to the overbought zone from here to here, let's say you started selling without having the stop loss, or here you started selling, or here you started selling, what is going to happen? 14% loss. Okay, if by believing this volume study, if you buy here, okay, what is going to happen? Okay, 90% of the time, remember guys, the volumes, whatever the volumes, okay, after the volume breakout only, any stocks going to fall. This is the volume. After the volumes only, stock is going to fall in the intraday. Okay, this is the wrong impression, whatever you are having, which are the wrong impressions. Okay, that means that is the whatever I am saying, right? The education, the quality of education is important. After gaining the quality of education, you should understand the market dynamics on the live chart. It is not like take the entry and go for the meetings, go for the office, start for the office, all those things. It is not like that. Market will not work like that. The poor financial education create the unrealistic expectations. Okay, don't start trading by listening your friends or some YouTubers. Okay, whoever says just for the views purpose or something, they will create something. Okay, that may not be workable model until unless you start learning the things and practice for a at least one cycle in the sense complete bull market. From the after corona, that was the complete bull market. Okay, it reached to the 26,000, then again it started falling. Okay, corona 2019 to 2025, 5 years. Okay, 5 years you might have seen the complete market cycle. Then you can conclude on the this kind of study you are having it. Okay, this is what the education and experience matters for trading in the markets. Okay, this is the first point I wanted to give you some experience. Okay, my past experiences. I am also loser, one of the loser, but I realized, okay, that is the reason I started this trading business. Still I am having very less number of YouTubers. I never says the lies. Okay, I never talk about the unrealistic thing. If I am taking the entry, then only I will talk about the stock. If I study the stock, then only I will tell the stock name also. Otherwise, I will not. Okay. Good trading strategy allows the trader to stand on the skills rather than the chance or luck. Okay. 90% of the people talks about the hero zero strategy. Okay. Hero zero strategy is the strategy if you buy the options on the expiry day, some options by luck, if you get at 10 rupees, some option which may go and end at the 100 rupees. Okay, this happens, this happens only once in a lifetime. Okay, it is like a lottery ticket. For this, many people, especially I see many retail people, they will buy the option premium 3 rupees into 1000 quantity. I am talking, okay, or 1 rupee into 10,000. They never thought like, okay, I am investing 10,000 rupees, which is going to become a zero. Okay, probability of becoming this 1 to 100 is almost zero. Why almost zero? Because in the probability of happening one event is almost zero. Remember guys, but whereas the probability of, let me tell you, okay, probability of coming rain tomorrow is zero. Okay, probability of coming rain from tomorrow to next 30 days, there is a probability you can calculate. Okay, probability of calculating between the ranges is some probability will be there. Okay, probability of getting particular event is almost zero. When the probability is zero, it is idiotic thing to buy the 1000 rupees and lose this 3000 rupees every expiry, 4 weeks a month. Okay, most of the people loses around 10 to 15,000 rupees with this. Okay, as per your expectation, you bought 1 rupee. Okay, then it became 10 rupees. Do you exit at the time? Because 90% of the time, one spike, it makes the option premium to spike within 5 minutes after 2 o'clock or between 2 to 2:30. One spike, one candle spike, it makes the 1 rupee to 25 rupees, sometimes even 100 rupees, but after that immediately will fall. Okay, this kind of luck based strategy will not give you the money. Instead doing this, what I would recommend you is, okay, as per my experience, stick for one strategy. Okay, stick for one strategy, learn in and out. Okay, take the more than 100 days, 100 trades, more than 100 trades, calculate, evaluate what is happening. Okay, where you have done the mistake. Okay, where you have done the mistake, correct it. Okay, you believe me or not, I took the 360 days intraday chart on the paper about the Nifty, okay, and Reliance stock and few stocks. Okay, few stocks, Infi, this kind of stocks, 360 days. That means last 255 trading days. I took the intraday chart of 5 minutes, took the printout of this, spread across my home. Okay, I segregated the similarities. What is happening when the Reliance is moving? Okay, what is happening in the HDFC Bank on the particular days? If the Reliance move, HDFC Bank falls. Okay, when Reliance falls, HDFC Bank moves. Okay, this kind of things. That is the reason I always check. This is called relative recognition of the two objects or two things. Okay, you have to always correlation, have the correlation. Okay, that is the reason I always track. This is my watch list. If you see my videos, right, always track pharma stocks. Okay, along with the pharma index, IT index, pharma index, energy, Nifty, CPSE, okay, infrastructure. In this, right, if infra goes up, Reliance goes up. If the Reliance goes up, what is happening to the HDFC Bank? Okay, I check HDFC Bank. When the HDFC Bank is going up, Bank Nifty also going up. Nifty obviously it will go up. Okay, that is not my trade. Okay, when the trend is there, I am the I am the reversal trade. I myself defined as a reversal trade, and I practiced where the market is going to reversal. Okay, first you know the reversal point here, then it is very easy. You can take the entry here and exit here. Okay, or you can take the entry here and exit here. The reversal points first we need to find out, so that the trending after the breakout, obviously it will go the market. This everybody knows it, where it is going to fall. Okay, after getting 50 percentage or 60 percentage or 30 percentage, we cannot aim for the 100 percentage or 200 percentage, 300 percentage. Okay, we need to figure it out where is the reversal point and respect that reversal point and exit. Okay, call for the exit. Okay, that is what I am saying. You need to have the strategy which will give you the signals in the market. Okay, and entry signal, exit signal, everything. Okay, the risk management, all strategy, in the sense it's not like when RSI shows overbought exit and oversold enter. It is not like that. Strategy in the sense, it has to give the buy signal, it has to give, you need to have the proper risk management. Okay, when your position goes, what you have to do? Okay, averaging you have to do, or you have to do something, some adjustments. Okay, when you took the put option, you reach to the 10k is maximum loss, immediately to correct this, sell to call options, or counter trade you have to take. Okay, such kind of strategy, all pros and cons, with all pros and cons you must define this strategy. That is called good trading strategy. It is not based on the luck. Okay, for that you need to put effort and education, everything you have to have, otherwise it is very difficult for you to manage. And third point is, okay, lack of recognition about the retail trading and institutional trading. Okay, here the retail trading is, you trade with your own money, okay, to generate some returns, some capital gains we can call. Okay, but institutions trade with the money. Okay, they get the salary. Okay, they hire the employees. That employees will trade on the market to generate the returns from which they are going to get the salary. Okay, that is where this fellows will not have any courtesy on you, or okay, this institutions, this employees, okay, there is a concept of value creation. If they create more value, what is the value creation? In the sense, how important you are for that company or for that project or for that, okay, for that project or for the testing or for that product, how important you are, how much value you are creating for the team, how much value you are creating, how responsible for your manager, or how your manager responsible for you. Okay, this that is called the value creation. Okay, these people works for the value creation, not for making the money. The more value they create, more the salary they get. Okay, that is where the institutional people works. Whereas the retail people, being a retail individual, you have to work for your own money. Okay, generate your own money. So when you are dealing with your own money, definitely you will be having the emotions. Okay, all, you will be having the emotion, and also you need to have the some techniques to control your emotions. Okay, to control your risk. Okay, some risk management, everything should be learned and defined, well defined. But here the institutions, somebody will define, these guys has to follow that rules. That's it. Sit in the office and execute or run the code. Okay, make the revenue, out of which they get the salary and incentives. Okay, here this money is somebody else, so these people will not have the any emotions. Okay, but whereas here they will be having the, okay, all the retail people having the emotions. Okay, this is the, you must understand this. Okay, when you are dealing your own, right, at least you must have the recognition of what required to protect your capital. That is important thing you need to understand. And also the institutions and you, right? Okay, here the thing is, these guys are professionally trained. Okay, let's say you are a software engineer. What you can do, you are expert writing in the software and provide fixing the bugs and provide the functionality for any product. Okay, in this area, in your domain, you are the expert. Similarly, whoever trading in the financial markets, they are expertise in the making the money. Okay, these people will be having all the tactics to make the money by end of the day. Okay, but whereas your domain is different, you are challenging these guys, which is going to be the wrong. When you are challenging these guys, at least you need to have the some tactics, how these guys trades. Okay, how this guys works, how the financial markets works. You need to have the proper understanding about these fellows, so that you will not be, okay, you will not be victim for that. Okay, so you will be expertise in your domain, these guys will be expertise in the financial domain. Okay, their responsibility to make the money, your responsibility to do your job. Rather than doing your job, you are coming here to loot these guys. Do you think is that the realistic behavior? Okay, this is what I am saying. These are the top 3 things you must understand before entering into the markets. Okay, at the same time, you need to have the proper education, proper capital, proper risk management, everything in the proper place. Okay, here I am concluding this video. Thank you so much for watching this video. Please subscribe for my channel. Thank you.